For many years, copper has been seen as something of the golden child amongst the six of the base metals which are traded here on the floor of the London Metal Exchange. However, as we head towards the second quarter of 2013, its status as top dog has started to see a bit of a wobble. We've seen that it's not immune to the outside influences which have been weighing on other base metal prices. Indeed, it's the global economic downturn that has been weighing heavily. We saw prices drop to a fresh 2013 low when it fell under $7,400 per tonne at the start of April. Since then, we have seen a bit of an uptick, last change in hands around $7,600 per tonne. Still down, however, still down around 7% on the start of the year. The downturn comes at a particularly bad time for copper producers, many of whom have been complaining that it's becoming increasingly expensive to produce the metal. This is due to them having to go into politically unstable areas, rising costs, as well as the decreasing ore grades. Adding to market woes then is demand concerns. China has yet to see the pickup in demand that had been expected. Meanwhile, Eurozone demand has seen a bit of a tail off as the country struggles within its economic downturn. Traditionally, copper is usually a balanced market with supply and demand. However, it's widely accepted that it will be in a surplus this year, and this, again, doing little to improve prices. Adding to this, we've seen inventories held in exchanges rising, LME warehouses are now at its highest level since September 2003. These are expected to continue to grow, with some people believing that we may even see 1 million tonnes by the end of 2013. As for getting metal out of these warehouses, well, we saw some new loadout rates coming in after the LME changed its rules at the start of April. This has reduced the queues slightly. New Orleans is the largest holder of copper. It has gone from a queue of 6 months to a queue of around 4.5 months. However, with cancelled warrants continuing to grow, currently they're at around a fresh all-time high. These are expected to continue to build, so we could potentially see some further queues in the future. For the rest of 2013 then, many market participants believe we're going to see a lot of range-bound trading, a lot of sideways trading, as markets might see some fluctuations as they react to currency, news and data flow, otherwise they're stuck in recent ranges. This is Kathleen Retourne for FastMarkets on the floor of the LME.